on Financial Focus, presented by Chelsea State Bank. We have Aaron Dubois and Jim Sykes. Good afternoon.
Good afternoon, Bart.
Yeah, happy holidays.
Well, happy holidays to you, too.
Well, thanks.
You're looking festive with your tie there.
Yeah.
Well, thanks. You guys look festive too, and you're kind of in the same color key today. Nicely done.
Yes, it wasn't even planned.
Oh, we're a week and a day until Christmas, and Aaron, you're done with Christmas shopping?
Pretty much, yes.
Congratulations.
Thank you.
Jim, you're not.
No. I can check with Jane and I'll let you know how we're doing.
Okay.
So.
Oh, it's a stressful month for many financially with all the demands of Christmas shopping, and people are using credit a lot. And today we want to talk to you about using credit wisely and having healthy consumer credit habits. What are healthy consumer credit habits?
Don't spend more than you can afford.
Mm-hmm.
That's number one. But you're right. This time of year, lots of people are going to overspend. And then when those bills start coming in January and February, you're thinking, oh my goodness. But you want to make wise use of your credit cards. You don't want to max them out. You want to keep them around 30 to 40% usage, which means if you've got a $1,000 limit, you want to keep that around $300 to $400. And then, obviously making your payments on time is a huge thing. But keeping that usage at 30 or 40% really helps the debt to income ratio, which lenders are going to look at.
The credit score, that's what I think most people know what your credit score is. What are the things that contribute to a good credit score, Aaron?
Well, making sure that you make your payments on time, that you don't have any 30, 60, 90-day lates. And if you do, really get those cleaned up quickly. Any kind of public derogatory, so that would be medical issues, you need to get those taken care of, work out payment arrangements, make sure that you pay your bills on time, just like Jim mentioned. And another thing with credit cards too, if, especially this time of year, try to make sure you pay them off. So, if you can get in that habit of paying them off, your balance, at least every month. But if you can just make sure that you're, making sure that you're making your mortgage payments timely, your auto payments timely, and your credit card debts on a timely basis, and really work to make sure that you don't have any past dues.
Sometimes banks or credit card companies will send a notice out to you, hey, good news, we've increased your credit limit, your spending limit. Is that a good thing? Should you accept that? Because I think they offer you the option to, no, keep it the same.
It's not a bad thing. It means that they respect how you deal with your credit. You certainly don't have to accept that. But like I was saying earlier, as long as you're keeping the ratio in line, it's not a bad thing. I would say one thing you want to be careful about this time of year, we're also going to get a lot of 0% for 12 months, which looks really appealing, but you're normally going to be paying probably 3 to 5% to do that. And if you don't pay that off in the time frame that they've got, it's going to cost you. So, it's just being wise. Sometimes that's a little bit too appealing to people. But like I said, if you don't get that paid off in that 12 months, you're going to pay for it.
Is there a difference between the types of loans that you have that someone would evaluate your credit worthiness? We've got mortgages, car loans. So do they all score the same, or are they looked at separately and differently?
On the scoring part,
they're looked at a little differently, because the installment loan is going to be like a car payment, a boat payment, where you've got a set dollar amount and you're making a payment for 60 months or 120 months, which falls under the installment. Revolving is going to be your credit cards, your home equity lines of credit, things like that, where you do want to make sure it's revolving, so you're not just max it out and then just make the minimum payment. So I couldn't tell you the exact method that credit reporting agencies use, but they do look at them differently. And like you mentioned, the mortgage is its own separate part of it.
And some mortgage companies also make sure that, you know, that's maybe a highest priority. So when they're looking at maybe doing a new mortgage, let's say they are, you know, either refinancing some debt or buying a new home, they look to see what your last mortgage payments, are you making those timely? And, you know, those are especially one of the highest things I believe that the credit reporting agencies look at when they're looking at scores, but also the mortgage companies are looking at that as well. Are you making your payments?
I would think as a consumer, you would want to pay your mortgage, then your car, like 1, 2. Those would be, you don't want to lose either one, right?
Right.
Correct.
And everything else, for the most part, except for the equity line of credit, credit cards are unsecured. So, like I said, not making the payments is never a good thing, but you're right, you don't want to lose your car, you don't want to lose your house. So just having a plan, having that budget to make sure you're getting all of those things paid in a timely fashion.
What do you think about these organizations that say, hey, we can fix your credit score? Should you be wary of that?
I would make sure and do some research before you really connect with one of those companies. In any bank would have, you know, some documentation on, you know, maybe some credit reporting agencies that, you know, you can work with. Because some of them can take advantage of people, and you know it's not a great situation when that happens, of course. So if you are in that situation, definitely reach out even to a local bank. You know, making sure that you know there's some really good reporting agencies that can help with that and kind of help you with your credit and get that paid down. So.
Your credit score will go down a lot faster than you can get it to rise back up. And a lot of those companies that you just mentioned, what they'll do is have you go out and basically dispute just about everything that's on your credit report. And if if the banks, the credit unions, they don't reply in a timely fashion, they have to remove it, and that's how your credit score goes up.
So
I didn't realize that part. So.
if anyone wants to look into further improving their credit score, understanding their credit score, or understanding borrowing and credit, you guys, you're an open door and welcome to visit with anyone that'd love to see you.
Definitely, correct. And even on the commercial side, so like obviously I do the commercial loan part of our portfolios, but we still look at the business owners' commercial, you know, personal credit. So that is taken into effect. So. But we're definitely open to looking at and helping anyone with their needs.
And these are the folks that would be happy to hear from you. Coming soon. How soon do we know yet?
Oh,
Jim,
by the way,
I
there
heard-
you are.
Yeah.
Oh,
You
there
made
you
the
are.
Christmas.
Oh,
You
yeah,
and
yeah.
Karen made the Christmas card for Chelsea State Bank.
That's a
hoping for
lovely Christmas card.
Yeah,
Yeah, I love that.
like I said, the Southern Comfort in the back really ties it together.
Oh, for the
Beginning
opening.
of January, hopefully, it's just waiting on the pieces of equipment that we have to have, which should be coming in. The 23rd is the delivery date for the cash handler. The furniture was all delivered. It looks really nice there. You did have a nice shot of the outside of the building.
It looks
If you
great.
drive by now, we've got Christmas lights up. Looks very festive. Just nobody in there full time yet.
So apparently you told your vendors that these were Christmas gifts, the equipment. You needed them to arrive before Christmas.
That would be helpful, yes.
Yes.
Well, thanks so much. Merry Christmas to
Merry Christmas.
both
Merry
of you.
Christmas to you too.
Yeah, and to
Thank
all
you.
the CSB team.
Yes, thank you.
Perfect.
Thanks so much. Aaron Dubois is Vice President and Commercial Banker, and Jim Sykes, Vice President and Branch Manager of the Jackson Banking Center of Chelsea State Bank. Well, next, oh, wait.